welcome back to Crypto Saving Experts, where we talk about the latest cryptocurrency news and take a look at the markets so that we all know exactly what is happening. My name is Jess and we do these live streams every single weekday. So if you are new here, please don't forget to like, subscribe, hit the bell notification button, and don't forget to tune in every single weekday. Let's take a look at what's happening with the price of Bitcoin right now. We can see that Bitcoin is down around 0.4% within the last 24 hours, down to 26,387. And we can see Ethereum has taken a similar move, down 0.6% in the last 24 hours to $1,721. So it's not looking too brilliant. I mean, we could start the week off with a green, and that is not what we've seen today. So it could be better. Taking a look at the biggest gainers today, Maker is up 4.2%, Kava is up 2.6%, and Trust is up 2.41%, with Ethereum proof of work up 2.43%. I've not been keeping an eye on this token actually, and that's something I want to keep an eye on, so I'm going to keep that up for when I finish off today's stream. Let's take a look at what's been happening over on Crypto Saving Experts Instagram. If you don't already follow us here, definitely do so. We are Crypto Saving Expert over on Instagram, and we post the latest cryptocurrency news. I've been posting lots of reels on there, keeping you up to date with what's going on within the cryptocurrency markets. First of all, we can see that CZ has shared a screenshot of the court transcript of his company's case with the SEC, showing they have no evidence of Binance.US misusing customer funds. Now, this is a big point here that needs to be pointed out. So CZ has explained that this scrutiny only validates his stance against the misuse of customer funds. Now, Coinbase and Binance have both been sued by the SEC within the last couple of weeks, and there's been a lot of speculation about what's really been happening behind closed doors in Binance. So seeing the court transcript of his company's case with the SEC, showing they had no evidence of Binance.US misusing customer funds, is a great step forward for Binance and CZ. If we take a look at the next one, we can see that he has tweeted. Let's let this load up, see what this says. It says, although we maintain that the SEC's request for emergency relief was entirely unwarranted, we are pleased with the disagreement over this request was mutually resolved on mutually acceptable terms. So users' funds have been and always will be safe and secure on all Binance affiliated platforms. So he's having to disrupt the FUD at the moment on Twitter. I mean, CZ has to do this pretty frequently. This is a common thing to see. Lots of FUD being fired at Binance, especially when the markets are down, and CZ trying to say, look, don't worry, this is all, we're working in the best way possible. Now the FUD may be a little bit more problematic this time around, because we have actually seen them be sued by the SEC, and this isn't just rumors on Twitter like we normally see. Let's take a look at what's happening here though with Ripple and XRP. Very exciting updates here from Brad Garlinghouse. So let's take a look at this. I hope you can hear this clearly on the stream. Sorry, this isn't going to be the best quality in the world, but listen up to this here. Let me unmute here and we can start again.
Hi, I'm Brad Garlinghouse. As many of you know, I don't often make videos like this, but then again, not every week has been like this one. A few days ago, after 2 years, 7 court orders, and over $100 million in legal bills, the Hinman speech documents, including internal SEC emails and comments leading up to this now infamous 2018 speech, they've finally been unsealed. Hinman's speech created new factors to determine if a token becomes sufficiently decentralized to no longer be considered a security. At best, these documents show that senior officials at the SEC couldn't agree on the law and told Bill Hinman directly he would confuse the public even more about the rules for crypto. At worst, they show that Hinman deliberately ignored the law, and he tried to create new laws, something only Congress can do. And while he was a public servant, Hinman received millions of dollars of payments from his law firm, which was part of an alliance with others that had a vested interest in this speech. This speech isn't about any one token or any one blockchain. This is about showing the extent to which the SEC has relentlessly pursued enforcement actions against crypto players while professing fake open arms and calls to come in and register, all the while lying about their so-called guidance. As some of you may know, Ripple spent years proactively engaging with the SEC. I personally met with Jay Clayton and Bill Hinman, with no lawyer present. Why would I need a lawyer if we were all coming together in good faith? We answered every question they had, and not once did they suggest to me that XRP was a security. We were fully transparent, not knowing they would then use this information against us. The SEC hit us with a surprise Wells notice, saying they were considering suing us for breaking securities laws, and still refused to provide specifics. To those that have recently been hit with their own Wells notices and lawsuits, this likely sounds all too familiar. When the lawsuit did drop against us, days before Christmas, a very Grinch-like touch, they made it personal. They sued Chris Larson and they sued myself, alleging we should have known all along that XRP was a security. You can now see plain as day, they couldn't even agree amongst themselves. And to me, it still seems like they can't. What we saw play out in our case is exactly what's still happening. The SEC is looking to kill crypto innovation in the United States, and its current chair, an unelected bureaucrat, I might add, is weaponizing the lack of regulatory clarity to exert jurisdiction over the entire crypto space. This is the definition of putting politics over people. It's the pursuit of power over sound policy. The SEC tried to bully us into acquiescing. Thankfully, we have had the resources to fight back. And now we can all see what they've fought so hard to hide. They knowingly created confusion about the rules, and they used that confusion to regulate through enforcement. That's bad faith, plain and simple. Ultimately, as our lawsuit comes to a close, for so many others, it's just starting. The fight for clarity has to continue. I just want to conclude by saying to my colleagues here at Ripple, to my family, my friends, everyone who has supported us over the past 2.5 years, and certainly to the whole of the XRP army, a very heartfelt and a very genuine thank you for that support.
Right, okay, so that's the video there that we've all just seen. I mean, we can see things like this only just starting up again. We've seen the SEC go after Binance and Coinbase within the last couple of weeks. And just like he's just said in this video, they have made it personal again. They have gone after CEO of Binance, CZ, as well as the company, and made out that he should know that they were offering unregistered securities from the get-go, and know that they are offering an exchange offering unregistered securities, even though the chairman of the SEC, Gary Gensler, tried to get a position in Binance, supposedly anyway, just a couple of years ago. So we can see here through the documents that have been released in the last couple of weeks, which we did do a deep dive in a live stream last week, that there's not clarity. The people behind closed doors, the SEC, don't really know how to regulate this industry, and they are just choosing to do so by enforcement instead of providing clarity for the industry. When these documents were released, it was a massive push forwards for the cryptocurrency space. We did see massive steps forwards for the industry as a whole, not just for XRP. Some people even went as far as saying, do you know what, this wasn't really that useful for Ripple, but it was really useful for Ethereum and the entire cryptocurrency space, because these documents discussed how we can determine whether an asset is a security or a commodity, and talking about the decentralization of an asset, and talking about the merge from being a security to becoming a commodity over time after a token is launched. So they've really opened up a can of worms essentially with these documents, and made big steps forward for the cryptocurrency space, and trying to help us get regulated in the correct way, while the SEC and US regulators push against cryptocurrency in the way they are doing. Other regions are pushing forwards, and we've seen that in Hong Kong over the weekend, and that is something we will discuss in today's stream. But let's take a look at what is continuing on here. We can pull that article up now. We are going to continue talking about regulation here on the stream. So let's take a look at what else we've got in today's news. We will get onto Hong Kong in just a second. So let's talk about the regulation in the US. The SEC asked to clarify its history of working with controversial broker-dealer Prometheum. Prometheum, I guess. The Blockchain Association has used the Freedom of Information Information Act to request information from the SEC regarding its previous associations with the crypto dealer. So the request follows the testimony in Congress supporting the SEC's stance on crypto. So a lot of questions are now being fired at the SEC. I mean, SEC is pointing the finger at many different cryptocurrency companies saying they're doing things wrong. And now we're looking for discrepancies in what the SEC has done hasn't always, sometimes they contradict themselves. So when they're doing this, we're going to be the first ones to point it out. If they're pointing out all the flaws in crypto and pointing the finger at companies that are trying to push the space forwards, we're going to turn things back on them. Let's take a look at the next article here. If you want to take a look at that article, don't forget to go to cryptosavingexpert.com, the best cryptocurrency news source out there. And also, before I forget, please don't forget to like, subscribe, hit the bell notification button on today's stream. Next, we have Binance bows out of Dutch market citing regulatory challenges. So Binance is going to exit the Netherlands after failed attempts to secure a VASP license from local authorities. So we have seen that happening in the Netherlands, and we have also seen Binance cancel its registration in the UK amid regulatory scrutiny. Now, this has created a lot of fear over on cryptocurrency Twitter, but we would like to point out here on the live stream that Binance's deregistration with the FCA did not have an operational impact, as it had never done business in the UK, a regional manager said. So UK people usually use Binance.com. Now, this is for non-US citizens. Now, they had this license in preparation to create a Binance.uk essentially, but they never actually managed to continue through with this. This license wasn't actually utilized, so the fact they've removed this license makes no impact on us. Let's take a look at what else is going on here though. We also have Binance blocked from accessing US customers' funds in new deal with the SEC. So only Binance.us employees can access customer funds in a new deal that solves the SEC's request to freeze its assets as the lawsuit proceeds to court. So this is in relation to the tweet that we have just read over on the Crypto Saving Expert Instagram. We can see here, although we maintain that the SEC's request for emergency relief was entirely unwarranted, we are pleased that the disagreement over this request was solved on mutually acceptable terms. So the terms are that only Binance.us employees can access customer funds in a new deal. So let's take a look at this. Binance, its affiliate, American affiliate in the US, SEC, have agreed to a new deal to see only Binance.us employees access customer funds in the short term. So there has been a document, so the three entities, Binance, Binance.us, and the SEC have all agreed to this. So this is outlining the exact provisions. Let's take a look at what this is. It locks out employees and top executives of the international Binance exchange, so just Binance, from accessing the private keys of wallets containing funds from its US customers, so funds held in Binance.us. It also excludes them from accessing hardware wallets and root access to Binance.us's Amazon Web Services tool. However, the federal judge overseeing the case must sign the agreement to make it official. So that's the last step we are waiting for here. The SEC had requested a freeze of Binance.us's assets, but the courts did deny this, thankfully, later last week. And we have seen that Binance.us has reportedly laid off employees to reduce its burn rate. So it's taken some employees out of the legal sector of the company now, because the legal sector in Binance.us were working on preventing something like this happening. Now it's actually happened. They need to change their goalposts. They can't try and continue to prevent it. It's already here. They now need to focus on winning this battle against the SEC and proving that they are a company that should stick around. Let's take a look at the next one here. Binance CEO dismisses reports of alleged money laundering investigation on French units. So you can see here we've had report after report after report on Binance in the last couple of days. So CZ has said Binance only received a surprise inspection from the French authorities, a norm for crypto businesses right now. Now we all know that the authorities and the regulators are checking up on cryptocurrency companies and checking they are operating in the correct way. So saying something like this, CZ has said, is not out of the ordinary. So we can see that he's tweeted, In France, surprise, no advance notice, on-site inspections of regulated businesses are the norm for banks and now for crypto too. And he's added the number 4, which suggests the report is only another FUD targeted at the largest cryptocurrency exchange. Let's continue here. We also have seen Backed follows Robinhood in delisting Matic, ADA and Sol due to regulatory uncertainty. So after specific tokens were listed as securities in the filings against Coinbase and against Binance last week, or even the week before. It's been 2 weeks now since these filings, I think. The time is going so fast because there's so much going on in crypto right now. If you are enjoying today's stream, please don't forget to like, subscribe, hit the bell notification button so you don't miss the latest cryptocurrency news. What we are seeing here is yet another company in the US delisting those tokens that were listed as securities, basically just to have their own backs to make sure they're not next on the SEC's list. So Matic, ADA and Sol are major tokens that have been listed as securities by the SEC in these filings. Whether they are securities or not is up for debate. All of these projects and all of their founders and all of their communities are fighting to prove that they are commodities. But that can be proving difficult when there's no clarity on the regulation. I mean, I'm not going to go down that rabbit hole again. I go down that argument every single live stream, so I'm sure you've all heard it by now. We need clarity on regulation, and we need it as soon as possible. If we are going down the route of decentralization, making something a commodity, we need that clear. And when we have that clear, I'm sure these projects will work forwards. On that conversation, though, I'm skipping around all of these articles today. We have seen in the last couple of days that the Ethereum developers are considering raising the max validator limit from 32 to 2048. Now we take a look at this, we know that both the minimum and maximum to become a validator on the Ethereum network is 32 Ethereum. So if you want to become a sole validator, you need 32 Ethereum, and you can start staking on the network and earn tokens for doing so. Now, the maximum for that is 32 Ethereum, and the minimum for that is 32 Ethereum. Now, they are actually the core developers are actually discussing changing that maximum amount. So, meaning that you can stake anywhere from 32 Ethereum to 2048 Ethereum per validator. Now, the downfalls of this is the amount of decentralization. So let's take a look at this. Where is this at the point I was just reading in this article here? So raising the cap could slow down the expansion of the active, I've just clicked off onto a different page, active validator set, ultimately improving the network's efficiency in terms of achieving finality within a single Ethereum slot. However, this does limit the amount of decentralization. Well, it doesn't limit the amount of decentralization. It affects the amount of decentralization, because what happens currently is if somebody wants to become a validator with more than 32 Ethereum, they need to set up multiple nodes there. And I know that it's still governed by one central authority, but it just means that we don't have that much spread anymore. So raising the maximum effective validator balance would allow such operators to manage fewer but higher stake validators, which could potentially translate into less complexity. However, of the associated risks, including potentially higher penalties for accidental double attestations or proposal, also known as slashing. So if you act incorrectly on the Ethereum network as a validator, your tokens can get slashed, meaning you can get fined some of your Ethereum tokens. So that's happening now, which is an interesting debate at a time like this. I wouldn't expect a project like this to start looking at ways that could affect decentralization at a time at which the SEC is debating whether tokens are securities or not. I know the effect of this is minimal, and it would take a while for this actually to be put in place, but it's an interesting conversation to have there. Let's take a look at what else is going on with the regulation in the US. It's all been absolutely crazy. Before we continue today's stream, please don't forget to like, subscribe, hit the bell notification button so you don't miss the latest cryptocurrency news. We do these live streams every single weekday, so make sure you don't miss out. As I always say, the best way to get into the cryptocurrency space and to stay up to date with the cryptocurrency space is coming in and tuning into these live streams. You can hear what's going on in the cryptocurrency news, even just by putting it on in the background, and you'll slowly learn how the news affects the prices of these assets, and you'll be able to stay in the loop of cryptocurrency during these down times, and when the markets start to really kick off again, you'll have learned everything you need to know ready for that bull market. I've seen a tweet by somebody on Twitter this morning that said, some footballers train with weights on their ankles, and this makes them feel super fast when they're actually out on the pitch, actually competing. And we're doing the same here during this period of time. We're in the bear market right now, and we're learning all of these skills when the markets are being extra harsh. When the bull market comes around, we would have built those skills so much that we'll be ready for that bull market to hit and to all perform incredibly well. So being around during these turbulent times and during the bear market is really, really important, and will definitely help you be prepared for the next bull market. So make sure to hit like, subscribe, press the bell notification button, help us in the algorithm, help us drive adoption of the cryptocurrency space, and help yourself learn as well. And if you've done all of those things and you still want to support, don't forget to share the stream with some friends as well. Let's see what is getting said in the chat. So Henance has said, I'm not against regulations, but the SEC must come out and be clear in whatever they are doing. Now, that is something I can definitely agree with. We are not against regulation here. We want to see regulation. We don't want FTX 2.0. We want these exchanges to be regulated in the correct way to make sure that they are using our funds in the correct way. But we need clarity on whether assets are securities or commodities, and we can really push the space forwards then. And by having this regulatory scenario right now with the SEC, who are regulating by enforcement, that is completely the wrong way to do this. And what's happening here is cryptocurrency companies are moving out of the US because of that lack of clarity and moving into other regions. And we've seen that with Hong Kong massively. Hong Kong wanted to become a cryptocurrency hotspot, and all they needed to do was say it. The banks that wanted to work with cryptocurrency companies, they've said they are going to regulate cryptocurrencies because that's the right thing to do. But they are going to be quite strict on this, but they're going to be clear on it. We've now seen also the regulators are pressuring major banks in the region to accept crypto. So in Hong Kong, the complete opposite is happening. The US are pushing cryptocurrency companies out of the region. Hong Kong are welcoming them in with open arms. And this might actually cause a massive adoption in China as well. But what we are seeing here is these companies are looking at this scenario and go, why are we fighting all of these problems in the US when in Hong Kong we don't have any of these problems? So we might see a massive wave of adoption in Asia within the next bull market. In fact, many people believe that will be the reason and the trigger for the next bull market. Let's take a look at this article here. So Hong Kong regulators are pressured major banks to accept crypto clients. Now, the banks there are concerned that their platform could be used to facilitate illegal activity and launder funds, but Hong Kong's monetary authority are set on becoming a cryptocurrency hotspot. Now, they're pressuring major local banks, including HSBC, Standard Chartered, and the Bank of China, to accept cryptocurrency exchanges and clients. So the persuasion comes as the US intensifies its crackdowns, as I was just saying. So Hong Kong pressures its banks to onboard cryptocurrency clients. So this is an unusual position. A Hong Kong-based partner at the law firm RPC said that while the Hong Kong Monetary Authority and the SFC are being vocal about their expectations, their position was unusual compared with regulators in other regions that have taken a more skeptical approach to cryptocurrencies. Now, as we've said over and over again, there's a massive first move advantage here. The first region to openly accept cryptocurrencies will be way, way further forward than other regions. And when other regions realize the good that cryptocurrencies and blockchain technology can bring, they're going to be racing to try and catch up. So that first wave of adoption is really, really important. Let's continue with the next article here and see what else is going on in today's stream. Please don't forget to like, subscribe, hit the bell notification button. If you haven't noticed, this is the week that I'm going to start speaking slower. If I'm speaking fast again, please put it in the chat. I'm really trying to work on this. Let's take a look at the next one here. We have crypto firm Wire announces closure due to market conditions. If you want to know more about this article, make sure to go to cryptosavingexpert.com. Let's take a look at the next one here, though. We have Ripple and Colombia's central bank team up to pilot high-value payments on its CBDC platform. Now, we've seen Ripple be adopted to help many different central bank digital currencies being created, or at least in its pilot programs in many different regions right now. So we are seeing that blockchain technology And seeing Ripple partner with different central banks to help build CBDCs. Now, I know some people are very against CBDCs and some people think it's much of a muchness right now, but we can see that Ripple is still making steps forwards despite putting hundreds of millions of dollars into their lawsuit with the SEC. Let's take a look at the next one here. Australia's crypto body to tackle issues with caused banking restrictions on exchanges. So Blockchain Australia insists that a more effective approach would be to protect and educate users on identifying and avoiding crypto-related scams. So we have seen problems with crypto in Australia within the last couple of months. We have seen Binance Australia, the affiliate of Binance, struggling in Australia. They had no banks wanting to work with them anymore. They had to stop all of their AUD pairs on the Australian affiliate platform. So we can see here that Blockchain Australia insists that a more effective approach would be protect and educate users on identifying and avoiding crypto-related scams. Definitely something I agree with there. Instead of limiting customers and consumers' use of the money, that would be a much safer approach. People are going to use cryptocurrencies no matter what. You may as well try and protect them rather than just trying to outright ban them. So let's take a look at the next article here, and we're just going to rush through a couple here because it's been a busy day and we've got more to come. Hackers steal another $1 million from DeFi protocol Atlantis loans. As I always say with things like this, cryptocurrency is a new space. It's a new industry. The coding languages we use in cryptocurrencies are still relatively new, and they're still trying to work out the best practices to use them. In that case, because we're new into the industry, yes, there's so much potential. Yes, there's so much room for growth, but that it does mean that we are going to see some problems along the way. We can't just create a new industry at the snap of our fingers and it be absolutely perfect. So there's still flaws in the industry that we need to learn from and grow from. Every time there's a hack, every time a hacker takes advantage of a bug in the code, we learn how to code more efficiently and more safely with extra security, and we continue to build the industry and grow it in a safer way. So we need to learn from our lessons essentially, and as a new space, we are going to have many lessons. Let's take a look at the next one here. So all eyes on Link's $5 support after the Chainlink team transfers tokens worth $95 million to Binance. Now this always spreads fear whenever even a Bitcoin whale sends a huge amount of Bitcoin to an exchange. Any huge amount of tokens that get sent to a cryptocurrency exchange spreads fear across the industry. We have that transparency on the blockchain. That means we can all see when this is taking place. And if we see tokens being transferred to a cryptocurrency exchange, does it mean they're going to sell those tokens into stable coins, into other assets? And does that mean there's going to be a huge amount of selling pressure on Link in this scenario? So 21 million Chainlink were transferred from the Chainlink wallets marked as non-circulating supply. And 17.95 million tokens worth 95 million were directly sent to Binance, suggesting a likely sale. So we could see some selling pressure there on Chainlink. We will keep an eye on that and report on that in these live streams. As I said, we do these every single weekday, so make sure to subscribe, and hit the bell notification button. We've also seen crypto Twitter community raise $500,000 for Zach XBT in his defense in defamation lawsuit. So Zach XBT basically does all of his research on the blockchain, uses the transparency of the blockchain to try and understand what's going on under the surface in cryptocurrency, and now he has been sued by Jeffrey Huang for defamation after the on-chain sleuth implicated him in the embezzlement of 22,000 ETH. So the crypto Twitter community has donated $500,000 for Zach XBT's legal defense. Now Zach XBT, as I said, was a sleuth. He looks at on-chain data and tries to work out what's really going on in cryptocurrency, where if there's a hack, he'll follow those funds and see where they could be going. Overall, I mean, sometimes he's not 100% correct, as nobody can be, and maybe there has been a case of defamation of character in this scenario, but overall, he's really good at bringing the tools to light of what we have within the cryptocurrency space. He looks at the on-chain data and says, because of this can happen, this has happened, and he can follow those transactions thoroughly and then provides all of this evidence on cryptocurrency Twitter. If anything, this shows people what on-chain analysis is, how it works and how we can take advantage of it, and how important having transparency on a blockchain is, as a bare minimum. But on top of that, sometimes he does actually bring things to light that we are trying to figure out in the cryptocurrency space. So overall, a positive impact on the cryptocurrency space, I would say. And it's nice to see the cryptocurrency community all pulling together to raise funds to help him defend himself. Let's take a look at what the next one is here. Cardano founder on mission to investigate UFO crash site. Now, this is a really, really interesting article. I'm going to drop that in the live chat right now. So if you want to take a look at that, make sure to go to cryptosavingexpert.com. Also, before I forget, if you go to the Crypto Saving Expert website and press that big blue sign up button, create an account there, tick that box there, and you get access to our newsletter every single Tuesday at 11 a.m. BST time. Now, that is tomorrow. So if you do that right now, before you forget, you'll get access to that newsletter, which will keep you up to date on the week of cryptocurrency. Let's take a look at the next one here. Texas regulator accuses crypto lender Abra of being insolvent since March. So Abra has carried on with normal operations, but failed to inform investors of the defaults on loans funded with assets in the Abra Boost accounts. So really interesting article there. If you want to take a look at that, as I said, go to Crypto Saving Expert. We're going to rush through this now. We've got some Bitcoin analysis to do, and I want to get on with it. So we can see Bybit has integrated ChatGPT to offer users advanced trading tools. Not the first cryptocurrency exchange to do this, and I imagine not the last. We've also seen CoinDesk had access to Tether reserves documents due to the Freedom of Information law. So Coinbase have apparently been fighting for these documents for 2 years. And we can see here that they've now been able to get obtain these documents. Let's take a look at what this shows. Now, Tether has received a huge amount of FUD over the years. The one lifeline that it gets thrown is that it's managed to hold its peg throughout all of the turbulence, throughout all of the FUD. And we are now seeing, there's been a lot of lack of transparency around Tether and its reserves over the years. They've tried to become more transparent as time has come on, and they are trying to show that they have the reserves they say they have. Now, we can see here what the company actually held as its reserves in March 2021. So we can see here Tether's reliance on commercial paper was known within the cryptocurrency world. As the company stated in 2021, it planned to invest in commercial paper. However, the extent to which the corporation relied on this type of asset was unknown until now. And this raised a huge amount of concerns over the years. So Tether funds on institutions and CoinDesk request. So Tether, the world's largest stablecoin, as we all know, is the counterparty asset for several crypto exchanges, and we can see here that Tether's activity was captured in the documents on the 4th of August 21. USD lending with other assets added $5.1 billion to the $40.6 billion assets, matching the USDT in circulation at the time. So the documents offer a rare but limited look at Tether's finances, which have long been a topic of cryptocurrency industry controversy. So the fact they've managed to get a hold of these documents is a brilliant thing here. Now, obviously, it just shows a snippet of what was happening at that time. It's been 2 years from then, but we can see that everything was in order at this time. Tether's US dollar reserves were reported again on the 7th of April 21, and Tether's fixed term deposit information was concealed. Now, Tether have been trying to hide these documents from CoinDesk throughout these 2 years, but they have, thankfully, I like to see transparency within the space. People come into cryptocurrency for decentralization, for transparency, and when companies like Tether are being very secretive with their reserves, it makes me wary. But to see that we have actually managed to get hold of these documents is a good thing. To see that Tether have fought to keep the documents from CoinDesk for 2 years is a bad thing. Let's take a look at the next article here. We have ETH Barcelona embraces Solarpunk and Lunarpunk in second edition starting in July. So this is the largest Ethereum conference in Spain and is returning for the second edition in a different structure that allows for an innovative conference and Web3 hackathon. If you are in Spain during this time and you want more information on what's going to be at this conference, I definitely recommend taking a look at that. I mean, going to any cryptocurrency conference is a really, really useful thing to do. It's a really good way to network within the cryptocurrency space and just learn more about the industry. Let's take a look at this final article and then we'll take a look at what's going on in the market. So Crypto.com has been exposed for operating controversial internal proprietary trading desks. So basically, they have a trading team within the exchange that is market making. So they're buying and selling the assets with very small margins between them. But when they do this on a big scale, they can hugely profit from this, and it provides liquidity for the exchange. Now, they've said that this is completely separate from Crypto.com. It's a Crypto.com team, but they're not working against the users. And that's a concern that many people have. Crypto.com have access to the entire order book. They know where everybody's trades are. So the fear is that the Crypto.com trading team could be trading against the users, which would obviously then be a very difficult problem. So the exchange has claimed that the internal trading operation was not a controversial practice, and it said all participants on the platform, including market makers, are treated equally, and the exchange does not rely on the trading operations as a source of revenue. But the act of internal trading by exchanges does not sit well with cryptocurrency traders, as many believe it could lead to a conflict of interest and, at worst, allow these platforms to trade against their users. So we've seen this after Binance was accused of using CZ's trading firm to manipulate prices as well. There's a huge amount of accusations in the space right now, to say the least, over and over again. If you are new here, please don't forget to like, subscribe, hit the bell notification button so you don't miss the latest cryptocurrency news. As I said, we do these live streams every single weekday. Let's take a look at the price of Bitcoin now, and then we'll close off today's stream. So we can see here, first of all, Bitcoin is at $26,444, up to that previous level of support at 26.6 to 26.9. We are waiting to see if we can break through this level, as we've been saying here on the live streams for a long time now. If we take a look at this level of resistance from these points here, and we take a look at this level of support from these points here, in fact, I'm going to take it there, and we pull this up here, you can see that we bounced that level of support pretty nicely. We had this level of support on for a while now before this bounce down here. We are now back up at that level of resistance. This is a descending wedge. There's a higher probability that it will break to the upside instead of to the downside, so we need to keep our eyes peeled on that. If we manage to break through that level of resistance, I'm sure the sentiment over on cryptocurrency Twitter will quickly flip back to being bullish again. If not, we may stay in this pattern for a little bit longer, but we'll have to keep an eye on that. So don't forget to stay tuned in these live streams every single weekday at 11 to 12 a.m. BST time. We do these live streams. Don't forget today to like, subscribe, hit the bell notification button, and I'll see you all back here tomorrow with more cryptocurrency news. See you then. Goodbye.